Trade Profit. I want to share with you one of my scalping strategies that's actually applicable to any time frame. If you're new to the markets or you're having trouble kind of timing your entries and you don't really know what you're doing and maybe chasing news and that kind of thing, this strategy will keep you out of trouble and it'll keep you kind of with the trend of the market. And I'll give you kind of a very defined plan of how to manage the trade and when to get out. So let's take a look at Lilly. Actually, this is Eli Lilly from today. The simple pattern, the beginning of it is on whatever time frame is applicable. I trade the 1 minute time frame and I scalp. And I know what you're thinking. Hey, Ken, I'm not a pattern day trader. I can't scalp. I can't get in and out hundreds of times a day. That's okay. This works on a 5-minute chart, a 15-minute chart. This can work on any time frame. But I want to give you the gist of it here. Basically, you're looking for two equidistant candles. The bodies of these candles are pretty much indistinguishable to the naked eye, and they should be pullbacks for a stock that is up on the day. So when I traded, while it was a completely down day across all the indices for most of the morning, Lilly was up, and so I was looking for buy opportunities there. I saw this pullback, two candles, pretty much indistinguishable. The bodies of the candles are almost the same length exactly, and I entered in on the next candle. So I know that's a really simple approach. I'm going to give you some more rules, and we'll go through some setups. So you enter at the close of the second candle. So you would enter immediately at the beginning of the next candle. As soon as that candle, the second candle closes, go ahead and get in. Obviously, you're going to have a time stop that's applicable to your time frame. Me, I use about 25 cents or so, and my profits can be anywhere from 20 cents on up. But I use about 25 cents, and I give it 4 more candles after my entry candle. So I get in at the close of the formation, I get in the next candle. If it's not in the money after 4 more candles, I go ahead and look for a way to get out, even if it hasn't hit my stop loss. That's my time stop. If these trades basically should go in your direction right away. They're really easy. The best ones, you're in the money the whole time, and then you're just managing the trade. So in this case, that's exactly what happened. I got in here. It was in the money the whole time. There was some erratic moves up here, but I did take a nice piece of it up here. So let's look for some other formations just on this day. And we'll stay on the 1 minute chart, and then we'll look for something on, say, the 5-minute or the 15-minute chart. Here's another example. In this case, I probably wouldn't have taken this. Lilly at this point was down on the day because of this move. So really, you're buying retracements on stocks that are up on the day or up in the general trend, and we'll talk about that in an overall time frame. So I wouldn't have taken this because at this point, Eli Lilly was actually negative on the day. Let's take a look at a different time frame and see what we can see. Let's take a look at Microsoft. Microsoft's actually been on an uptrend. If we were to go back a couple days, Microsoft's had a pretty good month. Again, these are 15-minute candles. Let's zoom in here. So here we'd be looking for buys. We don't want to do anything in the middle of the day, like I said, or we don't want to do anything at the beginning of the day in the first 15 minutes, but I think I spot something here. This looks like a decent play. Here's Microsoft a couple days ago. That was on 227, but it's been on an uptrend. Here's 2 15-minute pullbacks. You get in at the beginning of the next candle, and then you give it 4 candles, and then get out. And you can manage the trade however you want. The 4 candle thing is a time stop again. If it's not going your way, you should look to exit after 4 candles. In this case, this was going your way, so it was 1180. And it was up about half a point. Or maybe you held this. Since you're trading on a 15-minute time frame and you're not a day trader, you would have purchased somewhere around 1190. So let's bounce back to and see where it is a couple days later. So you would have bought it on 227. That's what we were just looking at. So that's here. You had a lot of opportunities to get out. 1190, 1240, even 1320. A point and a half or so. But anyways, that's the simple gist of it. Have a profit target, have a stop loss, look for two equidistant candles, pullbacks or overbought conditions. If it's something that's down, go ahead, take your entry there. Give it 4 candles after that. If it's not in the money, go ahead and get out. If it hits your stop loss, obviously get out. And if it hits your profit target, get out. Generally, when I scalp on the 1 minute time frame, arguably the hardest way to trade, I can get about 70% winners on this. I get about 70% winning trades. Generally, I take about 20 to 25 cents, or I give myself a stop loss of 25 cents. But at the same time, I'll also exit if it's not going my way after 4 bars after my entry. One thing I will mention, at least what I do in the very short time frames, if there's a signal and you get in and it's not profitable, so you get a signal, the bars are together, you get in, it turns out that you have to exit. If you get another signal that is in the same direction or lower, let's say you were looking to buy. So you look to buy, the stock doesn't go up, you end up taking your stop loss. If you get another signal within 10 bars, in my case 10 minutes, and the price is it's another buy signal again and it's below the previous spot where you sold, don't take it. You want to buy things that are going on an uptrend or short things that are on a downtrend. So I know there's a lot of rules in there, but two equidistant bars together, set your stop loss, know what your profit target is, give it 4 or 5 bars, look to get out, and don't take another entry in the same direction if price is worse than where you got out before within 10 bars. But anyways, I hope that was helpful for you. I think it's a lot better than just flipping a coin or chasing news or not knowing where to get in. It keeps you buying with the overall trend. You're buying dips on things that are going up, and you're selling against selling overbought conditions with something that generally is going down. And I give you some rules to manage it. So try it out. Tell me what you think. Add something in the comments below if you think the entry's good or if this is helpful. If you're new here and you'd like to see more tips like this, please hit the subscribe button. But that's it for this video. I'll see you in the next one. Thanks so much, and wishing you the best in profits.